The Bank of England is in a lot of trouble. It is on the brink of collapse. Now, we're going to be talking about how this is going to affect you in Canada, the United States, the European Union, all over the world. The contagion that is going to spread this week, it might be something that we have never seen in our entire lifetimes before. What we're going to talk about is how bad is this problem, and more importantly, how it's going to affect you and what you can do about it. Now, let's dig in. All right, you guys, our first article for the day, we're going to be talking about the Bank of England. We're going to go to the Bank of England's website themselves, and we're going to be talking about it. So if you go to the Bank of England website, the Bank of England is announcing additional measures to support the market functioning. Now, this happened last week. The entire British economy was on the brink of collapse. So if we head right away into their articles, we can see that they are telling us what they're going to do. Now, that's not the news. The news is it's run out on Friday, and we're waiting for tomorrow, which is Monday, to see the real effects of what's going to happen. If we get into it, the Bank of England had announced last week, we're going to read directly from their website, against the backdrop of unprecedented repricing of U.S. assets. So that is slang for absolute turmoil in the stock market and everything dropping. The bank announced a temporary and targeted intervention on September 28th to restore market functioning and long-dated government bonds to reduce the risks of contagion to credit conditions for the UK households and businesses. We look at this and we got to take this a little bit and break it down. Like, what does this mean to you and me? They're using a lot of jargon here. So unprecedented repricing of assets. So this is where the stock market went bananas downward because they didn't like the new prime minister's mini budget that they put forward. And they now have announced an intervention, like something that they're doing to purchase long dated government bonds. So they're money printing, and they want to reduce the risks of contagion from credit conditions in households and businesses. You guys know from watching this over the past couple weeks that the pension funds were getting margin called, and almost the entire pension funds went bust. They almost lost everything. Imagine you going to work for 20 years, 30 years, paying into this pension for 30 years, and some money market manager guy over leveraged himself and could have lost millions of people's pensions. I mean, the irresponsibility of this is just so big, it's hard for me to even fathom. All right, let's continue on their own website. This is the Bank of England.co.uk. The bank's financial stability objective, and in order to avoid dysfunction in its core funding markets, the purpose of these operations is to enable limited-driven investment funds to address the risk of resilience from volatility of the long-dated gilt market. Oh my God, guys, like, you need a degree just to understand what they're saying. And this is why people don't pay attention to this. The bank will stand ready to increase the size of its daily auctions to ensure that it has sufficient capacity for gilt purchases all the way to October 14th, which was Friday. The bank has carried out 8 daily auctions, offering to buy $40 billion, with a B, $40 billion. If we head down a little bit farther, the Bank of England states that they will stand ready through its regular index long-term repo operations, the famous repo market. And they will be giving easing of liquidity, more money printing. You guys, okay, so we don't want to get too technical, so we're all going to get lost on this, okay? So the pension funds were about to be margin called, which means that they have to come up with a lot of money in a very, very short amount of time because they took too risky of a bet. So they were in a lot of trouble. Now, imagine if all the pension funds went under. So what they're trying to do is print a lot of money, which you and I know is very inflationary. If they print a lot of money, they will rescue the market and not let the pension funds go down. But they said, this is going to be temporary, you guys. We still have this plan to raise interest rates a lot. Now, this is the 10-year gilt market. It's kind of like a treasury. So let's pull up the gilt market itself. I'd like you to pay attention to this. If you go and pull up the gilt market, the 10-year gilt market. Now you can go to marketwatch.com is the one that I had pulled up, but if you guys want to go to another one, you can feel free to do that too. UK 10-year gilt, GILT. Now, if you just pull up a chart that is like 1 month, okay? And we're going to take a look at that. And there's key dates I want you to pay attention to. So the chart is starting off on the 19th. I want you to notice right on the 23rd, I think it was, when they came out with the mini budget. At that time, the 10-year gilt was sitting around 3.5%. Now, when that happened, the market started tanking and the gilt was skyrocketing on fire. Between the September 23rd all the way up to its peak on September 27th, it skyrocketed from 3.5% to 4.5%. Now, I know you guys will say to me that, David, 1% is not a very big change. 1% is nothing. Listen, when tens of trillions of dollars are moving, 1% of that is a lot. And so what these pension funds were doing is borrowing money at 3.5%, 2.5%, whatever they had got it at, and then they were lending it out. But when those rates were skyrocketing really high, they were getting margin called and had to come up with that money because they made the wrong bet at the wrong time. That could have collapsed the entire pension funds, which would have collapsed the markets. They were hours away from bankrupting everything. All right, so let's see how successful they were because they printed so much money. If you look at this on there, between the 23rd, the mini budget, all the way to the 27th, it's skyrocketed, almost parabolic, 45 degrees up. They came out strong and started printing money. And guess what? When they started printing money over the next few days, they controlled it all the way a little bit. It only came down a little margin, but to the 4th of October. But I want you to pay attention if you go look at it right today, where it is sitting at. It's sitting at 4.4%. 4? You can't make this stuff up, man. 4.4. So listen, they were in a lot of trouble. They went and were buying, do you remember what we looked at? $10 billion per day, £1 billion per day. A dollar's worth more than a pound now. 10 billion a day. 40 billion that they've spent, and they were going to go rescue the repo market, all of this. And what did it buy them? A couple extra weeks. Now, they stopped the buying on Friday, 2 days ago. Today, we are October 16th, the Sunday. Tomorrow is Monday. The markets are about to open. I would not be surprised at all if we see massive contagion coming from England. So a lot of people will tell us, oh, David, that's another country. It's far away. What happens in England stays in England. And I'm sorry to bust your bubble. It doesn't stay there. There is mass contagion that happens around the world in our hyper-financialized market, and it's going to continue. Let's continue on. I wanted to show you a couple more articles. If we go check out this article on CNBC, this one is that the UK is on a cliff. So this cliff was what they're saying, and they're doing that emergency bond buying program. The central bank only wanted to do a 2-week intervention starting on the 28th, only a 2-week intervention, right? And it was the pension schemes that almost took them down, the pension plans. And they were only hours away from collapse, which is shocking to us, right? Even their finance minister has had to step down, or he was let go, let's say. So this is what made all the problems. On September 23rd, it prompted a widespread backlash over billions of pounds of unfunded tax cuts, which is what they wanted to do in the mini budget. And what has happened now, again, is the markets are the thing dictating policy. Now, everyone is surprised to hear that because they wanted to do their action from the government standpoint. When they did their actions and passed their mini budget, what happened? The stock market collapsed. The pension schemes were about to go down, and then everybody's reversing course because they cannot be the one on the watch when everything fell apart. All politicians are only here temporarily. So their main goal is get reelected and don't let the collapse happen on their watch. So we have had decades of different leaders kicking the can farther down the road. But how can you kick it farther down the road when you have to print 10 billion pounds a week, a day. You cannot kick it down that much. All right, let's continue on, you guys. I wanted to show you what is the contagion. So this is a famous stock in the United States. It's BRKA and BRKB. That's Berkshire Hathaway, Warren Buffett shares. So a lot of people will say what stays in England happens in England. It doesn't matter. Well, if you just look at Berkshire Hathaway, some people will say, well, if Warren Buffett loses a lot of money, then so be it. He's got a lot. But actually, let's see who owns Berkshire Hathaway B. If you go and type in Berkshire Hathaway B largest shareholders, you could look at that anywhere. The top 10 owners of Berkshire Hathaway is not Warren Buffett. It is not Charlie Munger. The number one holder is the Vanguard Group. Number two, BlackRock Fund Advisors. Number three, SSGA Fund Management. Don't even know who they are. The Bill and Melinda Gates Foundation, like the Bill Gates, Geode Capital, Northern Trust Investments, Morgan Stanley Smith Barney LLC, Charles Schwab, BlackRock Advisors, BlackRock Investment Management. Isn't that interesting, you guys? Because when we look at that list, it doesn't actually mean there's individuals. It's not Warren Buffett. All of those shares and companies are ones that are pooling money together for their investors. So what you don't realize is that money may be in your father's pension that he's been paying into. It could be in your mom was a nurse and or a teacher or something, and they have a pension money in there, or they've gone to the bank and bought some mutual fund at a bank, which I don't recommend. But if you did, they probably have that share in them. What you don't realize is how interconnected everything is. So if the UK pension funds go down, it does not stay local. It affects millions of people, and their contagion will happen around the world. Now, speaking of contagion, do you think that it is crazy that three major countries of the world all almost collapsed within 1 week? Yes, my friends, all within 1 week. Now, let's go take a look at this article. Now, this is a Korean article, but this is China and Japan are reducing their U.S. Treasury bonds. So that's an asset that they have, right? If we take a look at this, it says that Japan and China are the two of the biggest holders, 69 billion and 98.7 billion. That's how much they have in U.S. bonds, treasuries, and they're selling them because if we go down farther in the article, Japanese, Chinese, and South Korean currencies dropped 25%, 10%, and 17% versus the US dollar. So, guys, this is not really rocket science here. So over time, these governments wanted to make investments, as all countries do. So Korea, Japan, and China were all buying US treasuries as an investment, the quote unquote safest investment you can get in the world. Now, we know that that's not the case because inflation is eating that away. The few paltry couple percentages that you make disappears and evaporates with inflation. You actually are losing, but they still invest in that. Now imagine when your dollar value at whatever country you're in, let's say it's the yen in Japan, if it drops 25% versus the other side, you are in desperate need of liquidity. You need cash bad. So they're selling their stuff. They're selling their US treasuries. Let's take it back to just one guy who's living in his house, maybe has a cottage and a ski-doo or a sea-doo, like he's got a toy of some kind. Now you get into financial hardship. What do? You start selling your stuff to try to make ends meet. Maybe you have to sell your boat. Maybe you have to sell your cottage. Maybe you have to sell some of the stuff around your home in order to pay for rent. This is what the countries are doing on a much larger scale. They're in a lot of trouble and they're selling the things that they need. Now, in 1 week, you had England, massive economy on the planet. The London is only the second most powerful city in the world from a finance standpoint. New York being first, London being second. And they are in that much trouble. Can you believe that? England, China, and Japan almost were on the brink of collapse in 1 week. And guess what? All three governments did. They came in and rescued the market and printed an unprecedented amount of money. Listen, I know that they are telling you that this is temporary. It's temporary. But Milton Friedman, the famous economist, Nobel Prize winning economist, he said there is nothing as permanent as a temporary government program because it always sticks around. Remember, income tax was supposed to be temporary. You and I know it's still around 100 years later. We're still paying income tax. That's not going to go away. They just tell you it's going to be temporary. But there's a really good video you can go to YouTube and watch on Ray Dalio, and he's talking about the changing world order. I strongly suggest that you go look at that because all of these things that you are seeing today may seem scary to you, but I'm telling you, it has happened not just once, twice, tens, hundreds of times to different economies over the years. So though it may be new to you, it is not new to history. If you go and understand this, I think that will make you have a lot less stress. You need to be able to look at the contagion that could be happening in the future. So let's take a look at after those three major economies, what happened the week after that. Let's take a look at this article. Credit Suisse, my friends. If we go to just Google, I want you just to type in Credit Suisse. Top stories for Credit Suisse. Credit Suisse may sell all assets held by domestic bank. Credit Suisse prepares to sell parts of its business, the Swiss domestic bank. Credit Suisse is preparing Swiss business sales to raise capital because they're about to go down. Credit Suisse FX chief says he didn't love trader chat rooms. I don't know what that has to do with it. But this is my point, you guys. In 1 week, three massive countries almost collapse. The week after that, you have Credit Suisse and Deutsche Bank almost go under. Do you think that this is a coincidence? Come on, guys. We have to be smarter than that. This is where dominoes falling one after the other. And so this problem has come up not just in our timeline. I know people make references back to 2008 or back to the 70s or back to the 40s, but think about outside our timelines. These same events happen in 1600s, in the 1700s, 1800s, 1900s. So if we go and get some education, we can really make ourselves feel a lot better. If you are feeling extra bold, I strongly recommend this book by Ray Dalio, The Changing World Order. It will help you understand a lot of what is going on right now and how to protect yourself. If banks are going to be in a lot of trouble, you got to make sure that you don't have all of your net worth locked up in a bank, as capital controls could be put in. That is a danger, and because a lot of banks are closing down or limiting how much cash that you can get out. Number two, we have to remember that a lot of banks since 2008 have reversed from just depending on bailouts, which is where the government gives them money to stay open because they're too big to fail, to now bail-ins. We're going to be making a complete video on bail-ins because that is where banks have the legal right to go in and take the money out of your bank account in order to stay open. Remember, bail-in in Canada, that is allowed. And most people don't know that. So we have to be careful about that too. Make sure that you have some money outside of the system and don't tie up all your net worth there. One really easy way is to buy some gold. These little bits of gold here, you can have a lot of value. This is very, very compressed value. You can keep some gold and make sure that you always keep it in a safety deposit box. Don't keep this stuff at home. All right, you guys, we wish you the very best. We want you to be safe. Now, this contagion is going to continue. And even though they are trying to dampen inflation, the interest rate that they're charging now is vastly below what real inflation is. Remember, if inflation is coming in the United States much harder than expected, over 8%, yet they only can get 3 or 4% on the Treasury, that's a guarantee that you will lose 4% per year. And that is one promise I bet you that the government will keep. You will continue to lose money. I expect inflation to be sticking around for quite a while. We call them sticky categories here, and we expect it to happen like that for the foreseeable future, 3, 4, 5 years. Now, we will come out of this eventually, but this battle to beat inflation normally lasts just under 10 years. So let's see how fast we can get there. Anyway, we really want you guys to do well. We're trying to produce a whole bunch of content right now to try and help people through these tough times. Remember what I always say, that the next 2 years of your life is going to dictate the next 20. So we want you to be very, very prepared. We have a whole array of courses and books that are going to be coming out, helping you build wealth so that you can have not just for yourself, but generational wealth to be able to help out your family for a long time. If you even know one person that this could help, please remember just to send it to that one person. Let them know that we care, that you care, and we want you to really, really do well. Please remember to like this, subscribe to it, follow it, and give me that little thumbs up. It really helps out the algorithm a lot. I really appreciate it, and I'll be talking to you soon. Guys, thank you very much for your comments. Thank you guys for coming on. I'll answer a couple questions before I have to get going. I got quite a few on YouTube. I got some on TikTok. So fire away before, and I'll try to get through them if I can. Chicken, how are you, buddy? Yeah, thank you so much, you guys. We finally have 2,000 subscribers on YouTube. Super, super happy about that. Listen, next step is 10 grand. It would be really, really nice to get there. We're trying to get to 100,000. That is my big, lofty goal. Let's see if we can get there. But so thank you very much. I appreciate it. Hey, it's Jeremy. Yeah, thank you, Jeremy. So finally got to 2,000 subs. That's really fun. Mark, how are you, buddy? Desperation produces desperate people. The U.S. alone is on the hook for, wait for $130 trillion. Yeah, with a T. Unbelievable, right? So everybody, where Mark is coming up with those numbers, he's coming up with the unfunded liabilities and also the liabilities. So we hear in the news all the time about the $31 trillion of debt. They're burning through $1 trillion every 9 months. So the U.S. is burning through huge amounts of cash, but the unfunded liabilities is the smoking dragon that nobody wants to talk about. So remember what I say as an example is imagine that you have a kid. Yeah, I bought him diapers and whatever food for today, but I know I have to pay for him for the next 18 years. Now, I don't have that in a lump sum. I just know that I'm going to have to pay for it over time. It is an obligation that isn't coming due yet. And so the United States and every other country on the world, for sure, all the Western countries, all owe money to pensioners and veterans and governments and all kinds of stuff. And all that money is never really counted because it would freak everybody out. And it freaks me out. If you want to know more about that, go to usdebtclock.org. Hey, Jeremy, yeah, I should make merch. Jeremy, what do you think our name should be? My main goal is FIF. I call it FIFF, financial independence and financial freedom. Number one, financial independence. Start working on your own so you don't have to work for the man. Make your own money. Number two is finally get to a point where you don't have to work if you don't want to. It's a choice. So financial independence, step one, financial freedom, step two. You guys over on TikTok, let's see if we can do anything. Let's see if there's any good questions. You think government change policy since interest rates not bringing down inflation? No, the government only has one tool to bring down inflation, and that's demand destruction by raising interest rates, which is absolutely crazy because this has been tried for hundreds and hundreds and hundreds of years. It has never worked. Listen here, I'm going to break through all the noise, okay? The prices are going up because there's not enough stuff. The prices will keep going up if there is no stuff. If you want prices to come down, you need to make more stuff. That's it. There's your whole economy in one sentence. If you want more stuff, you need to make more stuff. So no government could ever just flip a switch and overnight create $10 billion of cars, $10 billion of clothes, $10 billion of shoes. They can't do that. But overnight, within minutes, they can create $10 billion online, where they just send an email, here's 10 billion. So they don't have the ability to make stuff. But now we're in this whole ESG movement around the world. And ESG is environmental, social, and governance. Governance. They want to put their fingers in everything. So by printing money, they're going to create more inflation. Every time you see in the news that they're creating $10 billion a day to buy out the bond market, the treasuries, if they're going to be doing reverse repos, whatever it is, it's all inflationary. It's going to come back and bite us. The bill will have to be paid. In Lebanon, banks have been limiting withdrawal limits for a while. Absolutely. They've been doing this for a long time. Now, it's not just Lebanon. it's Venezuela, it's China. Imagine having $10,000 in the bank and they say, nope, you can have $50 per week. That's what you're allowed. Because if everybody ran to the bank and extracted all their money at once, the banks would collapse and would close. They have to limit it, which is why I tell you not to leave all your money in one bank account for sure. At least split it up, but you should have some other money sitting in other places, in wherever you're going to find safe. There's a lot of places to put it. You got to get some money out of the system. Tony, you're saying $1 billion of real estate. Somebody that bought a fund that bought $1 billion in real estate in Canada is selling everything. I don't know what fund you're talking about. By the way, hi Desi, how are you? Good to see you. Otis, how are you, buddy? Good to see you too. Sorry guys, I'm just trying to catch up with some of your answers here. Do I remember when inflation was 12.4% and interest rates were 19? Yeah, for sure. But Otis, they've been kicking the can down the road for a long, long time. They were trying to keep inflation at the maximum that they could through money printing, money creation, and that's all in the national debt. And they were doing that. So when you have inflation running at 10% and you have your wages only going up 1%, it is eviscerating the middle class. But here is the funny thing. Back then, inflation was 12% and interest rates were 19. Good point. But if we go that 12% to 19, that's 7% over. And that was the only thing that crushed down inflation. All right. So just remember this, 7% over is what it was. Fine. Today, they're saying that inflation is only 8 or 9%, but they changed the calculation. If we measured inflation the same way that they did back in 1981, please go check out Shadow Stats. If you go check that out, you'll see that inflation today is not sitting at 8 or 9%. It's actually sitting at 16 or 17%. So for you to crush 16, 17% inflation, you would have to have your interest rate, like your example, 7% above real inflation. We would have to have inflation sitting, interest rates at 23%. I want you to think about that. If you had 23% interest rates on your home, your $1 million home will drop down to $175,000 within a couple weeks. Desi, you said you are wrong. Please say prices are going up because way too much money is printed. Thanks to Trudeau. So nominal money versus purchasing power in money is two separate things. Nominally, inflation will continue to push the prices up, but inflation will push the prices of everything way, way up. The interest rates are what is pulling homes down. So remember, there can always be two things happening at the same time. We call that cross currents. So the interest rate going up will be driving home prices down, and the money print that the government is doing is inflationary, which is pushing prices up. So we have to figure out what the alpha is or the delta, depending how you calculate it, between those two numbers. Doomsday theory, man. I'm wondering what you're going to be saying about it, man. I have a mortgage renewal in March 2023. What do you think is a good time for renewal? As long as you can wait. Wait till March 2023. Don't try to do it earlier. You're based in Toronto. Yeah, good. Don't try to do it any earlier. Wait till March. You're at a good time for renewal. The Fed pivot should happen before that. Most markets are banking on that, but let's see. We don't know. The pivot would only happen, pivot meaning either a pause in rates or decline in rates slightly, but that would only happen if you have mass contagion. I mean, mass capitulation in the markets. Ordinary, very educational. Hey guys, if you appreciate any of this stuff and if you appreciate any of my work and you feel that there's any value here, please like this thing, follow me here on TikTok, and please follow me on YouTube. I really appreciate it. We passed 2,000 subscribers over on YouTube. I really like to get the number higher. Thank you very much. Jessica, how about $1 million home dropping to 100,000? I'm down to buy. Yeah, but everybody says that. I got to tell you. So I have dealt with thousands of clients, and everybody and their dog and their next door neighbor's goat is all saying the same thing. They got money sitting on the side ready to buy. But we don't have to go back very far, because I have a lot of clients back in 2019 that were saying, I'm going to see what happens with the market. And then when the market dropped in 2020, they were so much panicked. They're like, I'm going to see what's going to happen. And then 2021 and 2022 was going bananas. They're like, I'm going to see what's going to happen. And prices are dropping now. They're still going to say, I'm going to see what's going to happen. If you saw the home prices drop from 1 million down to 100,000, you're probably going to be in a worldwide depression at that time. There's going to be no food anywhere, no jobs anywhere. That would be really, really, really bad. And I can tell you that when people are in that situation, most people aren't eager to buy. But my massive, massive hope for you is that you'll have the stomach, Jessica, at that time to overcome your fears and go against the market, because that is where wealth is made. Money can be made in any market. Wealth is created in a down market. I hope you do it, Jessica. Honestly, really hope that you do. So people are asking me to lock the rates 4 months ahead of March 23rd. I don't understand why. I mean, they are talking about interest rates going up 1 to 2 times more this year. I think that's absolute certainty. I think interest rates will be going up probably 0.75, 2 more times this year. There's enough information out there, especially the red hot inflation that came out of the US, that I wouldn't be surprised if they gave us a full 1% rate hike at the next meeting. Conclude how to beat inflation. Open a business, make more money, outrun inflation. That's how you got to do it. Desi, you have to outrun inflation. The best time to make money is identify a need and start doing things to help people. You know, that's why our businesses, we got 4 businesses that we run, and all of them are centered about real estate and wealth creation. One of our plans, we have a course that is coming out, shameless plug, how to build wealth and retire in 36 months. Now, of course, that depends on how much money that you have to start off with. Our last client, I mean, he retired within 1 year, but it really, really depends where you start. Iwa, how are you? When all this is set, with all that is said and done, what would the market for pricing be at that point? Don't know. How far would it go? You know, we don't know how far it can go. The last time we had a real big market crash, like 2008 was 50% drop, but 1929 was a 90% drop. That's in the stock market. But, you know, when there's a 50% drop in the stock market, home prices could drop 80, 90%, depending on the area. The more over leveraged the area, the more it's going to go down. Doomsday, you're going to get an extra part-time job to get extra money. Man, you're doing great. You have to outrun inflation. If you're not making at least 15% on your money per year, you're not doing enough. 15% per year is keeping up with inflation. You need to find ways to make more money than that. So far, we're 25% down. Yeah. So we're only half of what it was in 2008. So it could very easily be another 25% down, which is a 50% drop in the market. And I hope that you guys are smart enough when the market is down 50% that you're going to be buying a lot of stuff, because you're going to get some crazy deals everywhere. Ewa, you said you don't think it will drop. What I mean is at that point of stable and controlled inflation. All right. So you're thinking that we will have stable and controlled inflation? Listen, I hope you're right. Honestly, in my soul of souls, I want you to be right. I hope so. I pray that what I think is going to happen is not going to happen. Forex. I don't trade on the Forex. Already stocks are down 80%. I'm talking tech blue chips now. It depends on what stock, right? If you're talking Netflix, yes, I know. But the entire market as a whole isn't down 80%. Even in 2007, 2008, it wasn't down that much. All right, you guys, I wish you the very best. I hope that you had a very good night. Hope that you learned a couple things. Remember, we have an entire slew of books and courses that are going to be coming out. If you are interested in any of that, go to contact at Rough Team Realty. Send me an email, contact at Rough Team Realty, and just put it in the subject bar if you wanted a course, if you're interested in my book, or if you're interested in our wealth creating calculator. So that calculator is 39 bucks, and it helps you calculate all the streams of income on a property. So when you have a property, remember you're buying a small business. You not only have your cash flow and your value adds, you also have principal pay down, appreciation, depreciation. So you have all these different revenue streams. These calculators help you figure that out in a couple clicks. Um, Bed Bath and Beyond is suffering. Yep. Most likely they're file bankruptcy. Yeah, probably. All right, you guys, I wish you the very best. I hope that you have a great, great night. I appreciate it. Thank you very much for everything. Thank you very much for being supporters. Please follow me on YouTube. I appreciate it. We'll talk to you soon. Thank you very much, YouTube. We really appreciate it.